Hi, everybody. This is Margo Weatherford, real estate broker with eXp Realty in the Carolinas and now Georgia as well. I wanted to come to you today with a quick market update for the month of May in 2023. And I wanted to discuss just a few things. Number one, I want to talk to you about what the real estate market is doing as a whole across our country. Secondly, I want to talk about foreclosures and the infamous idea that foreclosures may be flooding the marketplace as we move into third and more importantly, fourth quarter of 23. And then lastly, I want to show you some interesting statistics as it relates to homeowners equity and how much equity homeowners actually have at this time. So I'm going to share my screen with you. We're going to move over to this market update. Doug Duncan, who is the chief economist for Fannie Mae, was quoted saying, on a quarterly basis, home prices rose a seasonally adjusted 1% in first quarter of 2023. Now, the fact that this happened is evidence of a pent-up mortgage demand, despite, of course, as you know, the affordability constraints that we're hearing about across the country. However, the reason that this probably happened is, if you remember, in third and fourth quarter of 22, interest rates rose from the free money, as I call it, that buyers and mortgage brokers were able to take advantage of. And so then as a result, when we enter 2023 and rates go down just a bit, home buyers come back into the space. So we did actually see a rise in home prices nationally in first quarter of 23. Also, Andy Walden, who is a researcher, vice president of research, was quoted saying just 5 months ago, and he means from March of 23 when he said this, so 5 months before that, just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis of 92% in 92% of all major US markets. Fast forward to March, and the opposite is happening. Prices are now rising in 92% of markets from February. So that's an interesting statistic to look at. Months inventory of homes for sale. This graphic is showing you in 2008 to 2010. Obviously, it was a very heavy buyer's market. Demand was low as a result of the recession. And now you can see today in 2023, we are in an extremely healthy seller's market, despite what you may be hearing. 2021 and 22 were such a drastic seller's market that even though we've neutralized a little bit, we are still in the green. So if you're thinking about selling a property, we are definitely not in a buyer's market, and we're not even anywhere close. So what's happening with foreclosures? You're hearing a lot, I'm sure, about foreclosure activity in the media. Obviously, we know some of that is fake news. A lot of it is meant to create a recession. But here are the facts. So 2017, there were 676,000 foreclosures. On average, between 2017 and 2019, there was just under 600,000 per year. There are 1 million fewer foreclosures in the last 3 years, being 2020 to 2022, than there were in 2017 to 2019. Now, as we move into 2023, you may be thinking, well, what's going to happen this year? However, I'm going to show you some of the reasons that a huge foreclosure influx is not predicted. So again, here are the foreclosure filings. In 2009, 2010, there were over 900,000 per year. Today, that number has dipped drastically. So I hear a lot of financial advisors that are sharing with their clients that they should wait to invest money into the real estate market until fourth quarter of 23. Financial advisors are saying that home prices and values are going to decrease drastically. In fact, Elon Musk said the same thing yesterday in his tweet on Twitter, which I find interesting because you never hear Elon talk negatively about Tesla. Tesla stock obviously took a nosedive with the rest of the NASDAQ during this past, I'd say 7 to, 24 months. However, he is saying that home prices are going to fall drastically. And I would just encourage you, if you're watching this and you've got some cash that you're holding on to and you're waiting or you're planning to wait, I wouldn't recommend you doing that. And it's based on a few things. Number one, what I just showed you, which is that we're in a very steady seller's market right now. Number two, the fact that the amount of foreclosures are drastically less than they were even in 2017 to 2019, which was, by the way, not a recession either. And the third reason that prices, according to the data, are not going to fall drastically is this slide here. So Americans are sitting on a tremendous amount of equity, more than they have historically. The blue represents mortgaged homes with greater than 50% equity. The orange represents less than 50%. The green represents owning their home free and clear. Almost 68% of this pie chart shows homeowners that either have over 50% equity to 100%. Those are massive numbers. So what this shows us is that Americans are not in a volatile place with their home ownership. This is one piece of data that supports the fact that we're not going to see a massive influx of homes at discounted prices in fourth quarter. The other items that support this data, well, one being unemployment rates. Unemployment rates are very low right now. You are seeing some vacancies in food and beverage and other industries. However, the national unemployment rate is very low. And third, mortgage lenders are actually being much more diligent in verifying their borrowers than they were in 2008, 2009, or 2007, I should say. And then the crash happened in 2008, 2009. So mortgage companies are being more stringent, much more stringent on their borrowers and making sure that their borrowers are going to be able to cover those monthly mortgage notes. So I'm sharing all of this with you to give you some knowledge, information, and tools to be able to make equipped decisions as it relates to your real estate purchases and your real estate sales. Obviously, the markets that I work in are hyper-local to the Southeast, and we know that real estate is a hyper-local business. So what we see in the Southeast may not be the same as what you see on the West Coast or in major cities. However, if you are in North Carolina, if you are in South Carolina or Georgia, in those more rural and some vacation home markets, I don't think we're going to see an incredible slowdown in the demand for property. Commercial property, we are seeing a slowdown. Companies are downsizing their brick and mortar and they don't need as much office space as they used to. So you are seeing, and you will continue to see, commercial buildings flood the market, and the owners, not being very satisfied with what they're going to be able to sell those properties for. So that may be a place to look if you're looking to get really good deals on real estate. But as far as the residential market, at least in the markets that I operate, I do not see a major downturn coming, and I do not see an incredible recession coming. Many actually say that we've already been in a recession, and I agree with that. It's not nearly as drastic as it was in 2008 and 2009, but the stock market has taken a little bit of a hit. And of course, today we'll find out if the Fed is going to raise the debt ceiling or not, which will have an effect on the real estate industry. But all of these factors combined give us really good information. And I want to give it to you so that you can make informed decisions about real estate. If you have any questions, feel free to email me or call me. I'm here for you always, and I hope you have a wonderful day. We'll see you next month.